trade talks just finished. Look at the market, you guys. Market looks very, very weak right now. It either looks like it's going to die or pop. Honestly, I would set up some play. I might even get some just SPX weeklies on both sides. All right, ladies and gentlemen, I hope you're having a wonderful Friday. Today was awesome. It was exciting, and I'm going to show you guys this play. If you missed it, this happened all live. $40 into 300 total, but I spent another 35, so 270 still not too bad. This is the option, so this was a day trade and an option trade, but yes, literally $40 into that amount. Now, this was on the stream alerts, as you see here, and this was just from watching the news. Today we had a lot of big events with the trade stuff, and it was right around here. There was stuff from the Secretary Mnuchin, and news started coming out. And as you see, we had it there on the stream alert. And then right after, I said I got to straddle both ways. Now, this was a weekly option. So, on the contrary, here's a secret option for you guys. I'm going to reveal it to you after we cover this play. But this was another option I made this week, but it was a longer term one, and it had a similar gain to this one. Okay, not as good, but still a little bit better, safer. But now, as you see here, this contract expired worthless. So, and this is a really good lesson for some of you guys to understand, well, when do you sell it? How do you know it's going to drop? Because this literally fell through a ceiling or a floor and died. So you don't want to be the person even beyond the person not selling out. I don't want you guys to be the person buying these up here thinking you're going to make money. And that's how you could lose a lot of money with options very, very quickly. So these are weeklies. These are gambling. And that's why I'm going to show you the other part. We're going to talk about this, but more importantly, paper trade. So at the same time, we could even compare these options and look at the longer term ones and see what happened. But that is the main focus. So it's going to be fun, you guys. And now here's the best part. Even though you see the stream alerts, that's what they are. That's for everything, literally what it is, stream alerts if anything happens on stream. So I've included the live clip from the stream. I said all of this live. If you were watching, we had like 1,800 people live watching today, and there was a lot going on too. So even on the stream alert, I put like $20 both ways. So hopefully you still would have made money even if you got the further one out of there. But there was so much going on because the Uber IPO was happening at the same time. So you guys will actually see when Uber released, that's when when Uber released, this was one like 11:46. So yeah, as you see right here, it was around the same time. So a lot was going on. We were, I was going crazy, and it's actually really funny because shout out the chat. But if you guys remember, I was even saying someone stole a put ahead of me. Right before I was going to buy these, someone stole a put, and I was like, all right, I'm not going to chase it. I was looking at Roku puts, and they took the ones I wanted. So I was like, all right, time to move on, and I got these instead. So blessing in disguise. Someone's watching over us there. But let's get into this. The main point, you don't need to have the stream alert. So this is just for the people. If you weren't there, as you see, you can see what's going on. There was news, and then we ended up making a play afterwards. But if you guys were on stream, you got to hear this, and hopefully you could learn from it. But again, the main point of this was to get time, the main theme of this week. So that's why I'm going to show you. This was a play here. You guys can see this started at 20 cents, maybe a little lower, and it was at $1, but it's still holding up. But this is what I want to show you guys, the safety in some of these options, and because some of you think you could hold these too. So, okay, we got to get into it. Let's do it. So drop the like, subscribe. You guys know what to do on that. But let's talk about the reasoning why we made this play and why I went to the SPXs. And now you'll see in the live clip, I was like, the market looks weak, this and that. Then the news was all over the place. And that's what, if you watch the other videos from the last couple days, and even if you've been on stream, we've been seeing that day after day. The news has been very, very dodgy, especially as it's been pertaining to this trade news and stuff. So we saw a bunch of weird movements, and then it was popping. But now being Friday, I did what I call this the pushing it to the wall strategy. Now, why did I play XPX or these SPXs? What is it? It's literally like the S&P 500 or the SPY, but it's the actual S&P 500. It's playing the larger index, the one that's $2,000. So this is why I liked it, because it's Friday and it's pushing it to the wall. And this is what I mean. So these are the contracts that I got, the 285s. But you notice they opened up at $3. So if you've watched the watch list videos, I've showed you guys this before. push it to a wall. The contract expires today. Now, this is gambling. So this is why you have to understand you guys can't play these on Robinhood. I recommend you paper trade these for a year, and if you could do it successfully, paper trade it for 2 weeks. Paper trade weeklies for 2 weeks, and if it works out for you, come talk to me, and I'll fund your account, okay? Before you guys try to do not try this at home, but because you could do, and but the whole concept of even showing you this strategy, like, why are you going to show us this strategy then if you're going to tell us not to play it? It's to understand time decay and how contracts value. You see, this is why I'm able to take advantage of it with what I know. I'm focusing a lot on value. So I want you guys could start in doing this at a different level. It's the same thing that applies with other contracts. It just moves at a faster pace when it's expiring. So think about it. The contract expires today, but this is the power of options. And this is why I went towards it. This is why I don't go towards the smaller stocks. Again, it depends on the opportunity, but this was the most ideal. Everything's moving weird. We can't really pinpoint anything. There's high volatility. I'm going to go for the broader index, but this is technically the SPX. Look at it. It's a $2,800 stock. That's the price of it. That's what it's trading at. That's the average weighting. But, for argument's sake, let's do the math here. If the contract's at 2,885, times that by 100 shares, that's $288,000. That's what this is representing. So you could get, I paid $40, as you guys see, but again, these ones still expired worthless. A lot of these expired worthless. So, but the whole idea is spending a little bit amount of money to control a large asset, and if you get in the money, that's why it goes crazy. But that's why I went to the SPXs. However, these hit very, very rarely. So again, I promise you guys are going to watch this video. You're going to watch me do it, and some of you are going to try to chase these the next few weeks. It's not always going to hit. It's certain timing. That's why I said, even in the stream alert, even when we were watching it, it's just because the market was acting very volatile. We're coming off of news. We're hitting this lows. Do you see what I'm saying? I even said there, if there's a surprise, that's literal insurance. That's why they're so cheap. And technically, look at what it did. The price went up. If you were buying puts and you were shorting, and think about it, that's what I did. So I bought a lot of puts yesterday. I bought like $900 of puts. I was down $400 or $500 on them. I got to make some of that money back. Put insurance. You go both ways, because then it's like, oh wow, if there's a surprise event and the market runs up more than it should or is expected, you could buy insurance. So I paid someone $40 today, and this is why it was so cheap, because come at this time, like 11:56, 8 in the morning Pacific, it was already at $4. Someone's saying, hey, it's like, why would somebody, why did I get it for so low? Because look at where the stock is, it's around here, the stock. And again, this is another example. You guys realize you don't have to be early when it comes to options. So that's why a lot of you, that's why we say go small and scale in. That's why you could do $40 as your first order, wait, but you need patience, because options isn't like stocks. It's not you buy it low and sell it high. If you get in first and sell it later, you win. It doesn't work like that, because look at, even on this play, do you guys notice the chart? That's the option. This is the SPY. It's a call. It's the SPX. So it's going up. The contract goes up a little bit. It's at that dollar from 40 cents. It's at 150. I didn't sell it. It's at 170, and I didn't sell it. And some of you might be asking, why didn't you sell it? I bought the other put, so I'm in $80 total. If I'm up at 160, I'm trying to get insurance. I don't want just 100% for $80 total profit with the commissions. And again, seeing what the market was doing, it was going up. I knew this was risky, but it was only at $100 at the point. It's at 184, and I think I probably just got distracted. Thank God, but now it dropped. So you see this, the market went up. It fully bounced. It was running, but then it dropped, and then the contract price plummeted back down to 60 cents. 60 cents, 20 cents above where we got it, and then it went up. And that shows you the volatility, but it's the same reason why I got it here. You're making a deal with somebody. So here, the contract expires. It's like 11:46. You got what? 12, 13, 14. You got 5 hours, 4.5 hours, let's say, right? Not even 4 hours. So we're saying, hey, in the next 4 hours, will you agree to sell us 100 shares of the SPX for $2,885 a share? And at this time, even though the market's going up, this guy's like, all right, kid, let me guess. You just started trading options. You know what? We got a deal, because the SPY's at 28268 at this point, right? Here's the SPX to give you the actual number. It was at 282. So I'm pretty much saying, hey, the SPY's going to move up about 60 points, right? And that's what it did, but that's still a big move. He's saying, all right, in 4 hours, this SPX is going to move up 60 points, which is it's a decent percentage move, and I'm going to give him $40 on top of that. So it has to go up to 288,540. He's like, all right, sure, by the end of the day, because if it doesn't, he keeps my money. Why would I buy it from, why would I choose to pay him more if the SPX ended lower? It wouldn't make sense. That's why nobody in the market, these didn't have a high value. But so then it started going up because as it started changing, the stock's moving up. Now, why did the contract shoot up? Because here's 1156, here's 1238. In 30 minutes now, it went from 2828 to 2858. So now at this point, it goes from a 60-point difference to a 30-point difference. And it did that in 30, 40 minutes. So now there's 3 hours left on the contract. So now people are in the market. If I wanted to sell to someone, those same people are like, well, I'll sell you 100 shares by the end of the day for $100 now, 120. And they're like, why? And the person's like, well, look at it. It just shot up in 30 minutes, this many points. It could go up higher. That's why he's putting that price. And like, okay, and then it holds, it drops a little bit. People's perceptions change because look at 20, 30 more minutes go by. Even around here, it starts to come down. They're like, okay, maybe it isn't going to keep doing this. The price starts to drop. It goes from that $1, literally goes from 120 back to 60. That's 50%. Then it pops up, but look, it goes higher. But now the option is cheaper because now what? You have another 20 minutes gone by, and now in that, how much time is left? So right here it was 3 hours, 30 minutes, but now there's 3 hours and 10 minutes, but now it's just barely above this price. At 3 hours, 30 minutes, they would pay you 120 because there's 3 hours, 30 minutes left. There's less time, and it's barely at the same price. That means it's moving at a slower pace because if it did this for the next 3 hours and 30 minutes, at that price, we wouldn't get up here. It would take too long. But then again, so that's why it keeps going up and up. And even though the price holds up, the contract starts dropping. But then it shoots up when it pops up again because now at the end of the day, every pop is getting closer to the strike price, which is good. But then when it stalls and wastes time, even if it stays the same, the contract drops and it needs to pop again. That's why here it really dropped because now even though the stock is higher, it's 20 points away. You're only 2 hours left in the market. So again, this is why these contracts are cheap, but now this is why we ended up making money. It eventually shot up. We got the guy to agree to sell it to us at 2885. The SPX is right. Where is it? 2885. Maybe I'm going to turn off this one so you guys can see it better. Or the option. So boom, it starts coming up here. 287, 80, and then it just ramps through and it goes to 2885. Now look at, this is around where I sold. So I want you guys to see now, why did I sell? I bought it here, SPXW 2885 for 40 cents. And when did we get those? So we got those at 1158. So again, right here, as it started to make that move, then here, let's go, I think, on the transaction. This is where we sold it. I sold it at 320 for 350. So where's the option at that point? Oh, 320. Literally right before the pop. Because again, I just hit that first pop. So why did I sell it there? Understand where it's going. This is me at what? 13.20. It just broke above and I got I was $1 or $2. I think I was $2 or $3 in the money. The stock's around there and it went up right after. But the whole idea, I was saying, hey, there's 2 hours left. Even though it's now worth $300, I understand the minute it falls below that strike price, it has value now. That's the whole idea. The minute it goes above 2885, that guy agreed to sell it to me at that point. It's now at 2887. That's a $2 difference on 100 shares. That's $200. And since it's such a big stock, it moves $2 so quick. And that's why it went in literally 3 or 4 minutes. If I held it, I could have made $700 off of it. But then literally, if I held it for 3 or 4 minutes, I could have made $700. But then literally 5 minutes later after that, I would have got $100 for it. And then another 10 minutes after that, you would have got $30 and then nothing. So that's why I sold quickly and understanding it. I could have held it a little longer, but I was like, dang, that was a big rip. We already got it. That was my insurance. And again, 1,000% are just about to cover it. I was trying to sell it at $450, but the bid went crazy and then I sold out of it. So there's that one. Very simple play, but not really. Again, hopefully you guys got to learn and understand that. Again, you'll see the live clip after, but now let me show you the secret play I wanted to disclose to you. This is another one from the Stream Alerts. And again, you guys were all able to witness it. You guys could go back and watch all of this too on the channel. But damn, this is a good Stream Alert. As you see, right off the morning, and I'll show you the transaction history here. Let me pull it up. But right off the morning, Boeing June put and Apple June put. I went for June, and that was the theme on Monday in which we talked about. Then I got the AT&T puts. Those were May 17th. You could take a look at those. But now here, I sold those Amazon calls. That was a good move because, again, the market went down and then bounced back up. We got to get that money, and then I grabbed a UVXY for next week, and then I sold out of that McDonald's for this week. And all those plays took advantage of time, and we could even go back through those. But if you bought at the right time, so on Monday, the market dropped and then shot back up. The IV, there was a moment there. If the market continued to go down, you could have profited off of it, but not if you got the shorter term contracts. That's the key, because they had high implied volatility and you could have ended up paying too much. But the longer term ones, those were the good ones. So here's that Apple put that I bought. Oh wait, this isn't it. It's this one. So there are the transactions you see right off the morning. Got those Apple puts. Now it's an Apple 165, so pretty far out the money, but I got it at 26 cents. But like I told you guys, I scaled in, and the June 270 put for Boeing. So let's look at the Apple. This was the contract I had up first for you guys. But again, this is if you bought a longer term contract. So again, Monday. This is, you guys have been following up with the news. That's what I'm saying on the stream, different strategies and everything. But hopefully you guys are learning on options from this. And there's no money sign Apple, just Apple. So we, again, time June, and it was really far the money, 165. That's June 2020. Those are, you guys are there like, that's not cheap, but that's not. So June 21st, 165. Now you see they're at 57 cents. They dropped, but they were at $1 today. And this is what I wanted to show you. We got it at the right time, and we were right. You were at 21 cents, 25 cents, and then it shot up to $1. And even after all of this crap and even that wild run up, you were still up at least 50%. We got it at 100%. We got it at $25. So now take a look. What if you played the weekly or even the May 17th? Even for the next week, let's say you got really far out of the money. What cost 25 cents on Monday? So those were 10 cents. Which ones would you have gotten on Monday? 16 cents. If you would have got these on Monday, you would have actually done a lot better. You would have took it 23 cents to $3. But now it's still at $1. You're still up 500%. But the time on this becomes a weekly. So you could kind of see the balance. But now here's the kicker. Let's go back to the ones you could have got on Monday for 25 cents now. Oh, these ones. I think you would have got in the money right there. You would have ended up at the same point as the June. So you would have literally either you got 30, you would have broke even. You would have literally broke even if you got anything cheaper. If you didn't spend $20 and you tried to get these, they would have expired worthless. And again, they all got good value and it's a big move, but you could see the difference here. So now let's also look at Boeing. So we got what? 35 cents for 270 on June. And again, as you're watching, I want you guys to understand. So these are back break even now, and we got them Monday. And these, oh no, these weren't the, remember. And I ended up getting, I think the 285s. I think I got these at 60, and then they went up to 140. So again, these are still even at break even because that's what I did. I waited till the next day, and I got more of them when I did the straddle. However, these ones are still holding. Let's check May 17th now. If you spent $30 on Monday, you would be barely up holding into this week. I mean, you'd be up about $20. See, we're at break even, but now here's the kicker. This is going to become a weekly. So depending on what, watch these on Monday. And now let's check even now the weekly. If you got a weekly on Monday or even throughout that week, if you spent $30, you would have been right here and you would have been worthless. You would have got money. And as you guys see, we were right on the move. So the timing, again, if you just even know what to play or when to play, it was awesome. So, I mean, there's it's hard to tell me, that's a big part of it. But the next part is the contract. Because as you see, if you get May 17th, the weekly, the Junes, you'll make some of them go up and down. This is why I'm showing you guys all this, to understand the intricacies and safety. And now you're seeing, though, which one is better. You guys are saying, well, I could have made more money on the apples with the June. It would have been better to make more money. Which one would have gave you more safety? Now, again, which one's going to become a weekly? Because it's crazy. Like the apples, you would have made more on the Mays, even on the weeklies. But now these don't have time. These are going to be a weekly now. The June still have about like 30 or 40 days. But then again, it all depends what happens. But for me, this is what I'm saying. I like being in the play. But as you even notice, though, these, for you guys who are starting out new, that's why I'm saying slow the game down. These move a lot faster. So these are bigger gains and bigger drops. It's faster. Boeing look crazy. As you get to the Junes, it moves a lot slower. So then, you guys are probably like, oh, I was right. I should have made more money. But that's where the emotional aspect comes in. All you guys got to do is make the right trade. So that's pretty much it. I would like to know what you guys think. Hopefully you had a good weekend and learned from this. We are going to stream tomorrow. I don't know what time. On the streaming channel, youtube.com/the stock market. We're going to do another live lesson. We got a lot of new people. Shout out all the people today, you guys. That was awesome. Thank you for keeping the chat awesome and respectful. Hope you have a wonderful weekend. And again, too, check out the stream alerts, the boot camp, and also the real estate course. This is the last day. So if you made it this far, you get the gift. CULT at checkout. Colt on the real estate course gets you 50% off. We had that code up. We forgot to take it down for a really long time, but now we're going to get to it. People found it. So it's the last day for today, but we are still going to give away courses. So we gave away like 3 or 4 this morning before the stream. Check out the recap. If you won, send me an email, tradingfraternity@gmail.com. But that is it, you guys. I love you. I will see you tomorrow. Check news, see if anything's going. Mnuchin says China trade talks were constructive. Oh, I don't think the market's going to like that. Watch out. Yeah, Mnuchin says China trade talks were productive. That's about it. So we'll see if the market, that was weird. It got a volume pop. It looked like it wanted to go, but then it looked like it was about to puke that Uber new lows. Volume, I don't even have the volume up there. Uber is going to be just like Lyft. We'll see. It's the volume, though. I mean, wait till when we hit that amount, I'll tell you guys when. Once half the float turns. Trade talks just finished. Look at the market, you guys. Market looks very, very weak right now. It either looks like it's going to die or pop, honestly. I would set up some play. I might even get some just SPX weeklies on both sides. 885. Oh, you're kidding me. Stupid. Yeah, man. I'm straddling the SPXY. If it would fill me. Okay, I just did a straddle on the SPX. Just a small. It's like 30, 40 bucks both ways, just to account for where we're at here. Okay, so I put out this stream alert. I did those SPXs. I got both ways. You got Roku dropping. Why on Uber waning? That's what I'm saying. So we're waiting on it. I mean, let me check it again.